Throughout history, one asset has stood the test of time. Wars, recessions, inflation, currency collapses, you name it. And yet, this shiny metal has remained a symbol of wealth and security: gold. But in today's world of stocks, crypto, and real estate, where does gold stand? Should you invest in it? How much should you hold? And most importantly, is gold still a good investment in 2025 and beyond? Let's break it all down. The history of gold. Gold isn't just another asset, it's money that has existed for over 5,000 years. Ancient civilizations used it for trade and power. In the U.S., the dollar was backed by gold until 1971, when President Nixon ended the gold standard. Since then, currencies are backed by nothing more than trust, but gold remains a universal store of value. In every major financial crisis, investors run back to gold, seeing it as a safe haven, and that's why gold is often called crisis insurance. Why people invest in gold. Gold is not about fast growth. It's about stability and protection. Investors buy gold mainly for 4 reasons. 1. Inflation hedge. When the cost of living rises, gold often rises too. For example, during the 1970s, U.S. inflation hit 13% and gold prices skyrocketed. 2. Currency protection. If the dollar weakens, gold usually gains value. 3. Crisis hedge. Wars, recessions, stock market crashes. Gold tends to hold or even increase in size. 4. Wealth preservation. Unlike paper money, gold cannot be printed. Its scarcity gives it intrinsic value. In short, gold isn't about making you rich overnight. It's about protecting what you already have. Ways to invest in gold. There are several ways to invest in gold, each with its pros and cons. 1. Physical gold. Coins, bars, and jewelry. Tangible, but storage and insurance can be a hassle. 2. Gold ETFs. Exchange-traded funds like SPDR Gold Trust, GLD. Easy to buy and sell like stocks, with low costs. 3. Gold mining stocks. Investing in companies that mine gold. Higher risk but can deliver higher returns. 4. Digital gold. Apps and fintech platforms let you buy small amounts of gold digitally. Convenient, but depends on the company's trustworthiness. 5. Gold futures and options. For advanced investors who want to trade on price speculation. Risky but powerful tools. Choosing the right method depends on whether you want safety, growth, or liquidity. Gold versus other investments. So how does gold stack up against other assets? Gold versus stocks. Over the long run, stocks usually outperform gold in returns, but stocks crash, gold protects. Gold versus real estate. Real estate gives rental income, gold doesn't, but gold is liquid. You can sell it instantly. Gold versus crypto. Crypto is digital gold, or so they say, but gold has 5,000 years of history. Crypto is just over a decade old. Both can complement each other, but gold remains more stable. Bottom line, gold is less about growth and more about balance in your portfolio. Pros and cons of gold. Let's break down the pros and cons. Pros. Hedge against inflation and currency devaluation. Safe haven in financial crises. Diversifies your portfolio. Highly liquid. Easy to sell anywhere in the world. Cons. No dividends or passive income. Prices can be volatile short-term. Storage and insurance costs for physical gold. Long-term returns usually lower than stocks. In simple terms, gold is insurance, not a wealth-building machine. How much gold should you own? Most financial experts recommend holding 5–15% of your portfolio in gold. Why? Too little, and it won't protect you during crises. Too much, and you may sacrifice growth opportunities from stocks or real estate. The key is balance. Gold works best as a diversifier, not your entire strategy. Risks of gold investing. Gold isn't risk-free. Price swings. Gold can drop 20–30% in a short time. Opportunity cost. While gold sits still, stocks or real estate could be generating wealth. Government actions. In history, governments have restricted or even confiscated gold in times of crisis. So while gold is safe in one sense, it also carries unique risks you must be aware of. Should you invest in gold in 2025? With global inflation pressures, rising debt, and geopolitical tensions, many analysts believe gold will continue to shine in the coming years. But remember, it's not about timing the market. It's about hedging your wealth for the long term. If you're building a strong, diversified portfolio, gold still deserves a place in 2025 and beyond. Gold is not the investment that will make you rich, but it's the investment that may protect your wealth when everything else falls apart. So, the golden rule is simple. Don't put all your eggs in one basket. A small portion of gold could be your shield in uncertain times. Now, what about you? Do you own gold, or are you planning to? Let me know in the comments below. And if you found this video valuable, make sure to hit that like button, subscribe, and share this with someone building their financial future.